Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Tuesday afternoon edition, and we have a lot to talk about with regards to financial markets. We'll get to some of that near the end. Obviously, some of you enjoying this wonderful bull rally in the equity indexes and some of the crashing commodities. But we'll talk more about that at the end. Today, I want to get started and get the most out of our guest who's joining us today. Back in 2017, I took a trip to Southeast Asia, and before I went, I'd heard a lot about Bitcoin and digital assets, and I fell into this rabbit hole where I downloaded everything I could onto my iPad, sat by the pool, and just had the most mentally stimulating trip. And of course, it's Thailand, so it's visually stimulating as well. And when I came back, I was just enamored with the potential for decentralized currencies. At that time, it was predominantly Bitcoin, right? And that was the early days. So, of course, as you do, you go out and you try to find yourself some experts. You dig around, you say, who really knows this industry? Not a bunch of BS or, Reddit, YouTube guys who have no clue what they're talking about, but people who really understand it. One of the guys I fell into was actually working for Yahoo Finance at the time, and I've been following him for years, kind of excited to have him on the program today. His name is Daniel Roberts. He's the Editor-in-Chief over at Decrypt, and he was back in 2017 interviewing some people, talking about crypto, specifically Bitcoin and Ethereum. So I want to dive deeper into that conversation, and he happens to be here with me today. So Daniel, welcome to the program.
Welcome. Welcome to you, or GM to you. Thanks for having me on, Merlin.
There you go, GM. Yeah, thank you so much for being on. I know you're a very busy guy. You guys type in his name in the internet, and you'll find hundreds and hundreds of interviews and articles. We'll take you over to Decrypt in a little bit. What I'd like to know to start out with is, you started writing about Bitcoin in 2011, which is like so ridiculously early. That's like writing about the horse and buggy, like right as the railroads are coming around. It's so old school. I have to know what brought you into Bitcoin in 2011.
Yeah, it's kind of a funny story now looking back on it, because anyone who was in that early was truly a diehard believer. And I don't mean anyone writing about it, but the people working on the tech. So the way it happened is I was at Fortune magazine. So this was, I believe, the first Bitcoin mention at Fortune, or at least Fortune.com. And the Fortune.com digital editor at the time, Megan Barnett, I have her to thank, because she assigned me a story. This was after Gawker had done, and this was, while Gawker was still alive, Gawker had done a very good kind of deep dive investigative piece all about Silk Road. Mm-hmm. And I'm sure many of your listeners know how that went and how Silk Road went. And there's a great book by Nick Bilton about, the Dread Pirate Roberts, no relation, and how everything went with Silk Road. But it was a marketplace, a website where many things were sold, including weapons, I believe, and also drugs. And Bitcoin was the currency of that website. And the news peg, the reason for us to write about it, was that a number of politicians, elected officials, including Chuck Schumer and some others, had issued a letter, a sort of letter of concern saying, look into this after the Gawker story. We need to look into this Bitcoin thing, figure it out, and crack down on it. So I wrote a story on it that basically required me to explain to readers, what is this thing, mm-hmm. Bitcoin? So first I had to educate myself. And the reason I mentioned the diehard people at the time is because I found this guy, I don't even remember his name, but he was, early to Bitcoin and I think had a podcast on it. And I interviewed him and he was trying to explain the tech to me. But as I know, even years later, it's something that can be confusing and opaque. And so I wrote a story on it and wrote about what this Bitcoin thing is. And I guess I got a couple of things wrong, like the explanation of how the wallet works and, blockchain. And instead of emailing me nicely, this guy posted on some Bitcoin forum that still exists today, which is frustrating, our entire email exchange, and was basically saying, this idiot doesn't get it. He doesn't get anything. And all I can say there is good luck to him if that's what he's doing every time an article gets something wrong about crypto, because now that every single website on the planet is trying to cover it, and it's very interesting for us watching that happen from Decrypt, all the time you see places get stuff wrong, and all you can do is hope that they figure it out and get it right and correct it. But that set me on a journey of just thinking that this stuff is really interesting and cool. And I'll preempt what you might ask, what a lot of people like to ask is, and do you own a bunch of this stuff? And the answer is I don't. In 2014, I bought one Bitcoin, mostly to be able to play around with it and for reporting purposes. And it was at $300 at the time. So I'm obviously up on that, but it's still, this is not life-changing money, and I didn't buy it in the first place as an investment to dump.
But having covered it for so long, here we are 11 years later, you would think that maybe it wasn't Bitcoin that you'd want to be holding, but, you have interviewed some really prominent people in this industry where I interview some people every now and again who are, pretty good in the industry, and they'll mention some project, and I go out there and I'll research it, and next thing you know, I'm going, man, this has huge potential. And, I've got a portfolio now of like 39 different cryptocurrencies. I'm always adding to it. I want to be owning the Amazon, the Googles, the Facebooks 10 years down the road when they finally get there. But why not more invested in it? Just conflict of interest maybe from a writer's perspective?
No, and I also have a little bit of ETH, which again, I tend to think you need to have in order to play around with this stuff. For example, if you're going to understand how MetaMask works and an Ethereum wallet, if you're going to use Uniswap, if you're going to test out the things you write about, you need to have a little fraction amount so that you can send it around and try the tech. I'm big on the belief that you need to experiment with the stuff you cover. And so a while back, and it kind of died down, but a few years back, there was a sort of debate among business media on whether people who cover crypto should own any. And some people took the extreme, severe hardline stance that if you own any crypto and you're writing about it, you're totally biased. Well, that seems silly to me. I mean, people who cover the stock market, which was me at Yahoo Finance, own stocks.
Right,
and
sure.
Even if you've never bought an individual stock or index, you have a 401k and that's in the market. So I disagree with that. I think that in order to write about intelligently, you need to own a tiny bit. That said, no, I haven't, loaded up on this stuff, and I don't dispense investment advice. I don't go out and tell people, hey, you should buy a bunch. I'm constantly having friends ask me, what should I buy?
Right.
And what I usually say is, well, first of all, I don't dispense investment advice. And second of all, the usual disclaimers, only put in what you can afford to lose. But then the closest I get to any actual specific advice on coins is I say, Bitcoin and Ethereum are the only two things in crypto that I would say for sure will still exist in 10 years. And I don't think that's controversial. Doesn't mean I'm saying all the other things are going to collapse and fail, but there's now tens of thousands of different cryptocurrencies, altcoins. They all have a stated business purpose. They all say we're going to change the world. I can't be sure about any of them, except to say that Bitcoin and Ethereum have proven themselves over a long period of time. They're the gold and the silver, and they will continue to exist.
Yeah, I tend to agree with you there. They're the number one and number two in my portfolio at this moment in time. But as we look at this evolution that's happened over the past, well, let's just call it since 2009. So you got yourself 13 years under the books. You've gone from just pure Bitcoin, and then we have some peer-to-peer cash systems, which also have some smart contracts with it. You go into Ethereum, then you have this huge ICO boom, and then you have the shitcoin boom and all these meme coins and all this stuff. There's always this kind of EKG, if you will, of excitement in the crypto space. And certainly it's gone to NFTs, which, watching a lot of the disinterest over the past couple weeks in NFTs has been interesting. Now it's DAOs. And I was kind of curious to get your take on, as someone who's objective, experimenting and seeing all these things and interviewing people, what's your thoughts on where we're headed with regards to maybe decentralized markets, digital assets, or cryptocurrencies?
Sure. And by the way, the EKG is a great analogy. I haven't heard that one. I do say often, it comes in waves, but that's a great image. I might steal that, Merlin.
Please, feel free, brother.
For myself. And that applies to both the market and also general interest in crypto. And, right now, in some places have started to write about this, we're in a strange 2 or 3 week period where the crypto market sucks and no one can really understand exactly why, because this should be a moment when crypto is flying. I mean, there's lots of big mainstream news about crypto, whether it's Ukraine, whether it's an executive order, which was seen as mostly a positive thing for the industry. So it's unclear why prices kind of sucks so much right now. We can get into that, but specifically you asked about DAOs.
Yeah.
And you're right, DAOs, NFTs, they're kind of multiple different new red hot corners within crypto, within Web3. DAOs are a really interesting one. And just to, remind your listeners, it stands for Decentralized Autonomous Organization. Of course, I've been saying and writing that I think that's a misnomer. They're really not decentralized. What they like to say is we're going to progressively decentralize, but they can't be decentralized when they launch because obviously someone has to launch them. They don't come out of thin air. There have to be founders who start them, human beings. So at first, usually when a DAO launches, there are 2 or 3 people who are the leaders and clearly created it and are the people influencing and driving the project. Eventually, they say, we'll progressively decentralize. Then the A, autonomous. Well, they're not really autonomous. I mean, autonomous is like smart contracts on Ethereum. You write the code, you set it, and they run themselves. DAOs are not like that. DAOs work based on human members voting. So all that is just a way of saying a better way to think of them is crypto organizations. They're groups of crypto people on the internet who pool their funds with a common purpose.
Yeah.
And as you correctly said, suddenly everyone has a DAO. DAOs are everywhere. I just came back from our Ethereal summit, which was in Wyoming. DAOs were probably the most discussed topic. Everyone has a DAO, and they're interesting. Some of them are purely investment focused. A group of strangers on the internet pool their funds, they buy a bunch of high value NFTs, and then they flip them and they make money. Some of them have ambitious hopes to pool their funds and purchase a physical asset, like an NBA team, good luck with that, or some other valuable thing, or in the case of Constitution DAO, a physical copy of the US Constitution, which they almost did.
Right.
But as we know, they came very close. It was the bidding at Sotheby's or Christie's, and they lost, ironically, to someone who hates crypto.
Almost made it.
Really, really interesting. So my take on them is they're cool, they're interesting, they're certainly multiplying, but they have a long way to go. There are some real limitations here. The structure, the chaos. Most DAOs, the place where they actually get things done and chat with the members is Discord, the chat app Discord. And I find Discord to be extremely noisy and chaotic. Some people think DAOs are the future of companies. I think if that's the case, they've still got a long way to go. But they're interesting, and they're probably not going away. On our new GM podcast, we just this week released our latest episode, and the interview is with Andrew Yang. And he has a DC lobbying DAO that he's pumping. So we'll see.
Yeah. It's interesting when you look at something like a DAO where you're right, there's three completely independent words: decentralized, autonomous, and organization. And in most cases, you're right, I don't believe that they're decentralized. I've seen actually some tokenomic distributions of some DAOs where they'll say they have 1 million tokens. Okay, great, you got 1 million tokens, but 500,001 are controlled by one wallet. And you're like, well, right. That's no longer a DAO. Your one token gets you one vote, and there's 1 million votes, but somebody's got 500,001 of them, so it doesn't matter what you vote for, they control it. So, to me, it's kind of an example of caveat emptor, buyers beware. And this isn't just for DAOs. This is for NFTs. This is for ICOs or IDOs. Anytime you're buying, even just flat out buying a cryptocurrency, you saw the what was that, Squid Games token, right? I mean, if you're buying stuff like this, you got to do your homework. And I think that there's a misconception that if you just buy anything in the crypto space, you're going to make money. And it's like, it couldn't be further from the truth. In reality, I think that 10 years down the road, 90% of these crypto projects will be gone in the way of the dodo.
Or I think the problem isn't a misconception that no matter what you buy, you'll make money. I think the problem is people jump in and they have the ethos of, I'm going to monitor this thing and it's going to moon and then I'm going to dump. And they're thinking in a time frame of days or weeks. And really, even though they're not stocks, they should be thinking the same way that you would with stocks, which is leave it alone. Buy it and forget about it. Do not check the price every day. So what can be frustrating, as I mentioned earlier, constantly I have friends asking me, what coin should I buy? What coin should I buy? In many cases, I tell them, I give them my Bitcoin and Ethereum advice, and then they say, well, I bought Shiba Inu.
Oh,
it's like, okay, and I get it that part of it is it's fun. They understand that it's stupid, it's a meme coin, fine. But then they're upset because a week later it has tanked 60%. They go, oh no. And it's like, well, yeah, I mean, if you're gonna buy it, fine, leave it alone. Maybe it'll go back up. But I think people are aping into certain coins thinking that they'll make a ton of money in the next week and get out.
Yeah.
And that shouldn't be your approach to any investing, right?
Absolutely. It's funny because that's one of my pet peeves is Shiba Inu. I got in a little Twitter battle with a guy a while back, and he was saying it's going to go to $1. And I'm like, dude, that's not mathematically possible. There's 1 quadrillion Shiba Inus, which would give it a market capitalization of 50 times Apple. And they don't even have a product. They don't sell anything and it has no use case. It's not going to happen, buddy. Oh, the beauty of the internet and what people believe. And it's kind of funny. This is why I love having you on, is I know that you research and I know that you're objective. I would say out of 100 people on YouTube or Twitter or Instagram or Discord or whatever, they always like, oh, Ethereum's mooning today. Cardano's going to $100. It's like, do you have any facts to support this? Other than just your opinion or hope? I mean, hopium is a very powerful drug.
You're onto something there. I tend to think that what can be unfortunate about crypto is you do have, and it's not the only industry where you have this, but you do have very, very vocal, active, loud groups of shitcoin pumpers and bag holders on Twitter.
Yep.
So, and I know this because when I was at Yahoo Finance, I often covered Ripple. And of course, as we speak, Ripple is locked in a really interesting battle with the SEC over its XRP token. And anytime that we write about Ripple, no matter what it is, you get the XRP army tweeting at you. And very often they're angry if it was in any way negative. They're even angry when it's a mostly positive story if they feel it wasn't positive enough. And they're angry, they're saying this is wrong, this is wrong. Usually there was nothing wrong. They have no leg to stand on. But inevitably, every reply you get, you click the Twitter bio, and in the bio it says like XRP, the standard, XRP to the moon. So you've got people who just their entire Twitter, and I'm not talking about bots. Of course there are bots.
Oh, yeah.
But there's also human beings
fanatics
who are just responding to every single thing, pumping the token they like, and that detracts from the seriousness of the whole industry.
Right. On that note, obviously, there's always going to be fanboys. There's going to be the maniacs for any asset class. Doesn't matter. We're talking wheat, corn, soybeans, Teslas, whatever the case may be.
Gold bugs.
Yeah. iPhone owners. I mean, those are the worst. No, I'm just kidding. Are you an Apple guy?
I sort of hate Apple, but yes, I have iPhone, and I'm not sure I could ever leave since I'm locked into the iMessage.
For some reason, I'm still a PC guy, but I do have an iPhone. Let's talk a little bit about the most recent event you went to. You did Camp Ethereal, which is a regular thing put on by Consensus. Walk our listeners, I think I actually mentioned something on the show, but walk our listeners through a little bit about what that was and maybe what are some of the key takeaways, because to me, that's a very, very forward-thinking group out there.
Yeah, and we should give the background here. I mean, Ethereal, the Ethereal Summit, dates back to 2017, and it is put on by Consensus, the Ethereum incubator. And among crypto people, especially the Ethereum types, it is a much loved event with a good reputation. It's almost like the counter to CoinDesk's Consensus event. Not to confuse Consensus with a U with Consensus with a Y. So they've held events in the past. I personally had not attended it before. And then I came over to Decrypt, which is funded by Consensus. And this year, the event was presented by Decrypt. So we helped plan it. I helped book a lot of the guests. And the vibe that we went for this time was smaller and more intimate. So, I've been to crypto events like Bitcoin Miami, and I know everyone has gone to ETH Denver, events that have thousands and thousands of people. And those can be very cool. There's value in those. But I also think there's great value in the opposite, a more intimate, small, cozy event. That's what we did with Camp Ethereal this year. We only invited like 200 people.
Oh, wow.
So we had 180 attendees. And it was great to see a lot of high value, intimate conversations happen. We did a little bit of programming, 2 days of panels, but people also did happy hours and dinners and a lot of skiing. We were in Jackson Hole and it was snowing. So it was very, very kind of true Web3. Instead of the suits, the CEOs of crypto exchanges and crypto companies and Wall Street types, it was the builders, the devs, the creators. And it was great. I mean, I can talk more about, what the most interesting things were, but I think that there's a real future for events like that, kind of intimate, small, high value, close contact.
Yeah, I unfortunately haven't made any of these events. At some point, I'm actually trying to get some help on my end from the education side so I can step away and do some of these events every now and again. But comparing this to like what I saw from Bitcoin Miami, it's just like night and day. I mean, that just looked like an absolute shit show, mayhem. Go to every restaurant, and order as many big steaks as you can, and rent a Lambo for the day. Did you rent a Lambo when you went?
No, I've never been in a Lambo. Thank you.
Sometimes if you just held that Bitcoin in 2011, you'd be dang it, son of a. It says, GD says, did Vitalik attend? I don't believe Vitalik attended Camp Ethereal.
No, but he did speak at last year's Ethereal, where we did, because of COVID, 2 days of all virtual interviews. And we had a killer lineup, Cuban, Vitalik, Edward Snowden, the Winklevoss twins, a bunch of big names. Nice.
You mentioned just a second ago that you could talk about some of the highlights. What were I didn't see all of it. Obviously, I didn't get an invite. Maybe next year. But the Joe Lubin one that you did at the end was great. For those who know, Joe Lubin was one of the founders of Ethereum and the head of Consensus, and really is just a pioneer, kind of groundbreaking innovation and technology in that space. Maybe talk a little about that, or what your big takeaways were from that event.
Sure. Well, we talked about DAOs already. There was a lot of chatter about DAOs. And by the way, the whole reason we chose Wyoming is that it really has become the DAO state. The second to last panel had Caitlin Long on it of Avanti Financial. Her crypto bank has rebranded from Avanti to Custodia. But she was really instrumental in leading the effort to have Wyoming be the first state to recognize DAOs as LLCs. And it was, and that's really interesting. So a lot of DAOs are kind of heading there, incorporating there. I think you'll see some crypto startups over the next few years incorporate in Wyoming rather than in Delaware. Of course, we know how in corporate America, everyone likes to incorporate in Delaware. So she was on the second to last panel, and they talked about how you even build a DAO, DAO tokenomics, how you kind of establish a structure, and how you get people to give their time and their effort and make it sticky. Because it's one thing to just start a DAO and go from 0 to 1, but then how do you get people to actually stay in there? And it's all about momentum with DAOs, or the thing dies. You need to breathe life into it. So that was interesting. The final panel was my fireside chat with Joe Lubin, as he said. And we really covered a lot of ground. You know, one interesting area for people who are invested in ETH is he talked about Ethereum 2.0. So that is the transition. In the past, we've called it an update or an upgrade, but apparently now you're not supposed to. Now it's called the merge.
Right, the merge.
The merge to a proof of stake mining mechanism for the Ethereum blockchain. And what ETH maxis, or even just people bullish on Ethereum, will tell you is this is going to be great. This is going to change everything. When it transitions to proof of stake, it's going to use less energy. So all the people concerned about environmental impact can go away. ETH should hypothetically go up. I'm not saying that. I don't dispense investment advice, but Joe's comments were certainly a good advertising for buying ETH.
They were, for sure.
Yeah. And then supposedly gas fees should go down. Although some people say they don't really believe that it'll help with gas fees. But of course, gas fees on the Ethereum blockchain have been very high, mostly because of its success and because of how heavily it's being used. But he talked about that, talked about Solana and Polygon, which are kind of competitors to Ethereum. And the last point I'd say is he is extremely bullish on NFTs, even though he says he's never bought one. But that's because he's just busy, building the things that actually host these things like NFTs. But he thinks that there are tons of use cases for NFTs beyond just the speculative, Bored Ape stuff, which I kind of blame Bored Apes for a lot of the NFT hate that is out there. I really do.
Yeah. It's funny. I was responding to your colleague, Kater, when she posted something on Twitter today, saying, well, why is all of a sudden like this big disinterest in NFTs? I said, well, back in 1637 in February, all of a sudden people realized that their tulip futures contracts were really worth nothing. There's no real value behind it, and they fell like 95% over the next 3 months. And I go, it's not that NFTs are dead and they're idiotic and going to go away. There's a use case, but the use case that we're seeing now, in my opinion, is somewhat idiotic. I mean, spending 10, 15, $20 million for a static JPEG of an ape just seems really stupid, regardless of what benefits it gets you. What's your view on NFT? I don't own any NFTs, by the way, unless you count playing some, play to earn games. I have some NFTs in those games, but never really purchased anything. I know you have a couple. What's your take on maybe the utility and benefits of NFT going forwards? Is this a viable segment of the digital ecosystem?
So I'm with you that right now, I think that unfortunately what gets the most attention is kind of the cash grabby stuff. Yep. And I think that will change. It's hard for me to believe, even though people with an ape or a punk will tell you that it's going to retain its value. It's hard for me to believe that, a Bored Ape JPEG will still be worth $1 million in 5 years. Yeah. But we'll see. We'll see if those people are long on those. I mean, what's more interesting to me are the use cases, whether it's NFTs that you have to hold in order to go to a physical event like Gary Vaynerchuk is doing. NFTs that serve as a membership pass or a ticket into a club, a digital chat. In some cases, Bored Apes are an example, IP happening with NFTs, where we're seeing Hollywood do projects where they have to pay the holder of a specific ape because they want to use that ape in an ad or on a product label. That's going to be really interesting. So there are use cases, and I think we'll see more and more of them. And I think, like with most things, the cream will rise. So there have been some NFTs in the past year that are just digital trading cards. You can't do anything with them other than look at the JPEG.
Right. Those
are going to go away, or at least they're going to lose their value. Unless they're in some way unique, or maybe they behave like fan tokens, where you just love Gronk so much that you will pay money for a Gronk NFT. Fine. But for the most part, I think the tech is here to stay. And I also like to say that we probably haven't seen the most interesting use cases yet for this technology. It remains to be seen.
Yeah, I think it's going to really boom when it comes to music and royalties on music. Specific art, I think anybody can create an NFT. I taught a class on cryptocurrency, and I actually did create NFTs in there. Went to OpenSea, and it's like, just did some squiggles and put it up for sale and see what bites. Nobody bought mine for $50 million as I was asking, but these things may happen to some people. I saw a video that was very interesting, where they basically created 10,000 kind of Bored Ape knockoffs and did it in about 30 seconds. And it was all just, here's the 8 different layers, mix them and make 10,000 out of this. And it was like, wow, that was that simple, and these guys are selling that many? It just blew my mind.
And by the way, first of all, there's a project called CryptoFunks with an H, and it's CryptoPunks, but they're facing the other way. And even those have become valuable, which is kind of crazy.
No copyright infringement there, right?
Yeah, I think people see it as a cool example of how, you can just change one thing in the code, and now they can't say that you jacked it. It's unique. But in general, there are tons of imitation things now, and there are even projects that, are rug pulls and they're meant to fool people, and that's the shame. And that's another thing that, the people who think crypto is scammy or fraudulent, or they think NFTs are all a scam or stupid, they point to that stuff and it helps their cause. And so unfortunately, the existence of those things detract from the more cool, legitimate use cases. But that's the reality.
Absolutely.
Look, there's lots of criminal use cases for the dollar. There's criminal plots that happen involving stocks and insider trading. That doesn't mean that the underlying thing is itself a scam and a fraud. Right.
True. Doug says the only value of an NFT is what people put on them. When you want bread to feed your family, that JPEG will be worth this. Well, look, NFTs, you could say that a car is an NFT. You own it, right? You have a license, you have the receipt, you have the pink slip for that car, but it also gives you utility. And some of these NFTs actually give you utility, such as Dan mentioned, access to a specific club or something like that, or some membership fee and attend an event. So there's utility there. It's just up to us to put the value on it.
And by the way, I don't blame people who also point out, especially with things like apes, in some cases, the NFTs are becoming just a status symbol for the rich.
Yep.
And that's a shame, and I don't think that represents everyone in the space. Especially ironic, since crypto from the beginning was supposed to be about everyone being in, decentralized, not just for the wealthy, helping the unbanked and underbanked. So
yeah. All right, let me ask. I know we got to wrap up here. I'm sure you got tons of stuff to do. We also obviously had the executive order last week, and I heard you interview a couple people and get their perspectives. I'd like to get your perspective on it because I know that you cover that beat. There are really kind of 6 key points with that one, and what's your take?
Well, yeah, the 6 key points, I would boil it down to one key point, which was basically that they want to do something. And I'm not going to say that it was a kicking the can down the road, because we actually got the order and it was much anticipated, and finally, it's here and it's real. But people should understand there's still no there in the sense that there's no substantive definitive action or ruling in it. It's still basically a formalized call to action for all of the different agencies. And you were asking me about Ethereal. I asked Joe Lubin his take on the executive order, and he kind of waved his hands and he said that to him, the order was, hey, all you agencies, figure it out. So, for years, we've seen various U.S. agencies kind of jockeying for territory on who gets jurisdiction here, who gets to regulate crypto. The CFTC thinks it might be them because commodities and futures trading. The SEC obviously cracked down on the ICOs. The IRS has been asking people about whether they sold crypto for a gain on their taxes. The EO, to me, is saying, let's all come together and unify and get one roadmap that we all agree on to regulate crypto and protect consumers. And to crypto people, that might sound alarming. Oh, God, they're coming. But that's not the same as let's shut it all down. Let's ban it. They're not doing that. And so I think that people should have an optimistic response to this executive order, because the twist, the take is crypto has now gone so mainstream that the White House and the administration cannot ignore it.
Yeah, I agree. And I my take was, I agree with Joe, which is, hey, I want you to figure something out. But what was really important for me is, I know this is not a political thing, but I mean, we have seen that for the most part, the Democrats have been actually kind of tough on crypto. And I was expecting it to be a little bit more hard-fisted. It was really saying, I didn't see anything in there that said, let's stop this. It was like, we want to be the leaders, we want to be the innovators, let's make sure people don't get screwed by, buying bad things. So I looked at it as a rather positive thing. Not like this is it, the answer we've been looking for, but at least it wasn't, hey, shut it down like China did.
Well, and it's funny, right at the end there, you mentioned China. I was about to say, I think a lot of what has spurred this, and people should understand that the executive order is not about Ukraine. You got Elizabeth Warren out there saying Russia could use crypto to avoid sanctions. This executive order was in the works before the Russia-Ukraine stuff happened. I think China was the biggest driver here in the sense that China launched its digital yuan. So China, instead of talking about a CBDC, a central bank digital currency, did it and launched one. And I think that led a lot of people in crypto, when testifying in various panels in front of the Senate and in front of Congress, to use that example to say, look, if we're not careful, we're going to lose in this area of tech and innovation. Do you want to lose to China? And that's a great carrot to hold out for U.S. politicians.
Yeah, absolutely. All right, I got two questions for you. Echo says, where do you see Web 3.0 in 10 years in our everyday life?
That's the question right now, right? And I should say, as a partial answer to that, I'm not in the camp of the Web3 people who say, oh, this is Web 2, this is Web 2, and they point to Web 2 things and they say, NGMI, not going to make it, Web 2, dead.
Right.
No. A lot of the companies, big tech companies that people are now calling Web 2 are going to be just fine. They're going nowhere, and by going nowhere, I mean they're not going away,
right.
And in some cases they'll innovate and they'll find ways to use blockchain, or they won't, but they're not yet being killed to the extent that Web3 people would like to think. They say, Facebook, Google, all these companies are going to be in big trouble and they're going to be ruined by crypto. I don't think so. I think that what will happen is more and more companies, platforms, tools will use blockchain on the back end. And many of them might not even really publicize it. They're not going to come out and say, we're a crypto company now. But they'll be using blockchain, or they'll be using some form of decentralized tech. Maybe they'll launch a token so that they have an internal economy or a way to reward their most loyal users. And that doesn't, those things will kind of coexist. So I think a lot of the things you use in 10 years will be using blockchain on the back end without you knowing it. That'll be a sign that blockchain is actually, working and is legitimate. And it's anyone's guess as to where the crypto market goes, but I think it will still exist, but probably more and more companies will have to behave like Coinbase, where they play nice with regulators.
Sure. My take in 10 years, I think it's really about choice. I think that we'll have choices whether we want to be on a centralized entity or a decentralized entity. We can be looking at keeping your money in a bank, right, and making 0.01% interest per year. Or maybe I could go to some lending protocols or some DeFi protocols and be pulling in 10, 15, 20% per year. I will have that choice, but I don't think that you're going to see your Wells Fargo, your Geicos, these centralized entities completely disappear, right? They will just modify their businesses and morph. And remember, these companies have more money than God, so they will be able to influence lobbyists, I think, and be able to keep their monopolistic approach, but at least we'll have some choice down the road, I believe. Anyway. Let's see, last one, and GD, we got to wrap up here, but Big Eb says, what do you think of Gensler as a friend or a foe to crypto? He taught crypto, and it seems like he is not the friendliest towards it.
Yeah, so it's a little bit vindicating for me, because from the minute that he was rumored to be the pick for SEC chair, and then when he was announced, crypto people were out there celebrating, saying, yay, this guy taught a course on blockchain at MIT. This is great. And in multiple media hits, I kept saying, okay, but don't assume that just because he knows about the tech, that means he's rah-rah in favor of it. And sure enough, he has seemed pretty chilly to it. I think in many cases, in many ways, like Elizabeth Warren, his focus is protect investors, protect consumers. That doesn't mean he's anti, but he certainly so far has not been the friend that people thought. And I think people were wrong to assume that just because he once taught a blockchain course meant that he would, we'd be off to the races and he'd approve all the Bitcoin ETFs.
Right.
That said, and he's actually been very clear in public about why he hasn't approved a true Bitcoin ETF, a spot ETF. He said, he thinks that the market isn't mature enough and there isn't enough daily liquidity to protect investors. It's all about, investors and the market, and there's not enough of a reliable, safe market. It's too volatile. It goes back to the same criticism everyone has. Too volatile. Well, so for now, he did approve Bitcoin futures ETFs, not the ETF people wanted, but it's something. And I think it's a sign that eventually they'll approve more. But he needs to feel really comfortable before he's going to do that. The reason he said he would allow a Bitcoin futures ETF is because they're regulated by the same rules that regulate mutual funds. And he likes the way those are set up. I mean, roll your eyes if you want.
I'm rolling them.
Like most things, the truth lies somewhere in the middle. The truth lies somewhere in the middle. He hasn't been the big friend people expected, but he's not the boogeyman. I don't think he wants to ban crypto, but he did say that he thinks a lot of the newly launched tokens look like unregistered securities, right? So those places that have launched tokens willy-nilly are going to probably hear from the SEC.
Yeah, it's pretty easy to do. In class, we actually built an NFT, or an NFT. We built multiple cryptocurrencies. It takes about 7 minutes to do, from scratch to full-on implementation on a blockchain. It's like, holy cow, if it's that easy and I can just get Kanye West or Kardashian to pump this thing for me, I'm rich.
Yeah, that part's not so easy unless you want to pay them a bunch of
money. No, you give them a bunch. I mean, that's exactly what Shiba Inu did. They gave $500 trillion to Vitalik. I mean, come on.
Right, and then he dumped it.
Dumped it. You know what? At least he gave it to charity. So he gave like $1 billion to that Indian Relief Fund, which was like, bravo, good for you, and then burn the rest. Dan, tell me, let's do a little bit of a plug here for Decrypt. Some people were asking about the podcast. You have 2 of them going on, right?
Yep. Yes. The website is decrypt.co. We are at .co. Beautiful website on desktop, or check out our mobile app. We have a great mobile app. We have a terrific product team. You should subscribe to our daily email newsletter. And on Saturdays, the newsletter is a column by me or by my colleague, Jeff Roberts on Crypto. So subscribe to our email. You'll get that high value Saturday email. And then, as you said, we've got 2 podcasts. There's the Decrypt Daily, one of the few and one of the very best daily crypto podcasts. That's hosted by Matthew Deemer, who, by the way, separately is running for Congress in Ohio. Very interesting guy.
Interesting.
And he's very pro-crypto. And then more recently, maybe 2 months ago, we launched a second podcast called GM. And I co-host that. We've had some great guests on there: Amy Wu, Eric Voorhees, Andrew Yang, and Sam Bankman-Fried. So more to come there, and you can listen to either podcast on wherever you podcast.
There you go. Margaret says on YouTube, no, you go to decrypt.co. That's where the podcasts are at. There are some videos as I'm scrolling through here and showing you guys on the website. You can see little highlights. This is actually Joe Lubin of Consensus doing the interview at the Camp Ethereal just a couple days ago, right?
Yep. And yes, we do have a YouTube, but also everything on the YouTube is on our own video section on the website.
Awesome. Well, hey, Daniel, thank you so much for coming on. I know it's been, I'm not known in the industry, but I appreciate you helping out the little guys, at least get a little bit more perspective on what this world and the digital economy is like, your perspectives on it. Love what you do. Keep doing what you're doing, and we'll continue to support you over at Decrypt.
Thank you. I always say yes to things like this. And by the way, Merlin, great interviewing.
Oh, thank you. I've been doing this a long time for no rewards, but the rewards is happy people like you, and my group loves it as well. So, hey, thanks so much. Maybe we'll do it again in the future. And if you got other people over at Decrypt you want to bring on, I'd love to interview them as well.
Excellent. Good to hear.
Great. Thank you so much. Take care. Guys, that was Dan Roberts of Decrypt. He's the editor-in-chief over there. There's a lot of different resources out there for you to get information in the crypto and digital asset space. He is one of the more objective ones. I don't see him pumping and dumping. I don't see like blatant opinions. Even I am pretty bad, because I'll have blatant opinions about something and say, man, this is a shit coin. Stay away from this piece of garbage. I haven't seen or heard him say anything along those lines. It's very center of the road analysis of projects. And I think as we get into this space, it's important to think that way so you don't get too excited and run one way or the other with regards to crypto. So Dan Roberts, just a great guy, and if you want to follow him, he's on Instagram as well. It's Read Dan at Twitter. It's Read Dan Wright, and then of course Decrypt. They've got a whole team of great writers over there as well. All right, what are some of the other questions that came up here? Does he intend to buy heavy into Bitcoin, and what buy signal? I don't think he's going to be buying big into Bitcoin. It's just not his thing, which I thought was rather interesting. I love that he's transparent about it. I am obviously much more heavy into crypto, and I'm into a lot of different ones. And, who knows? Hopefully I will be rewarded down the road. Right now, it looks like it's going to be kind of sideways or maybe even down for quite some time until we get this the next big pump to the upside. But, that's just the risk I'm willing to take in the crypto space. And good thing it doesn't impact his writing as he writes on crypto on a regular basis. What was the other one? If a company like Google creates their own token, would that diminish the value of other cryptos or vice versa? No, actually, I don't think so at all. So it really depends on what the utility of that token is going to be. So let's say, for example, Google creates their own token. What's it for? The number one question if you're buying any cryptocurrency or token needs to be, what is this for? Does it serve a purpose, right? So again, Shiba Inu serves no purpose. Really, you can't really do anything with it. If I look at Ethereum and their token, or actually coin, I need that to access their network, which has thousands of companies plugged into it. So that has strict utility. Bitcoin's value is its store of value. You look at something like Decentraland or the Mana tokens. Those are used to buy things inside of a game. So they have utility. If Google came out with a coin, what would the utility of that token be? I'm curious. What do you guys think? I don't know what that would possibly look like. Maybe you use these tokens for ads or some special perks, but would it devalue anything else in crypto? No. It would probably further bolster the crypto markets, because what that means is now this behemoth in the world, Google, with over $2 trillion market cap, is going to have a token which I can... What's it going to be? Is it its own token? Probably not. Probably going to be maybe on Ethereum? Great. Now I can go out to things like SushiSwap or Uniswap, and I can be swapping my tokens for Google's tokens. So it further expands the legitimacy of the ecosystem. That to me is the exciting part of that one. Okay, I thought I had some questions here earlier. There was only really one question that came in tonight or last night, and that was on the NQ. Use them to stop the ads. Ooh, that might be a good one, GD. You can use the Google tokens to block ads. Very interesting use case scenario right there. That is, you might be onto something, like legitimately onto something, where you could have an account in your browser, a little Google wallet, and if there's tokens in there, it will take a little bit out of each token to skip ads. Not a bad. I'd probably pay for some of those because I hate the ads out there. Okay. Let's go into the markets. I had this question that came through earlier, and it says, seems that this is from Les, who's taking a class today, so hopefully you're enjoying your class over at OTA. NQ is respecting that daily demand zone pointed out last week. Yes, more of a statement than a question. So let me bring up the markets here so we can kind of do a little wrap up here on the markets. And I got to run. I have a presentation on the metaverse to a bunch of CEOs today. Let's go and start at the bottom, work away from crude oil. Then we'll get to the NASDAQ chart that Les had mentioned. I did not see the follow-through being this strong on crude oil. I actually thought we were going to stop right around that century mark, and we knifed through that thing today. You can see crude oil right now at 95.18, very ugly. Next stop is really this demand zone that it all started from. Kind of crazy to think we're coming that far down, but down 7.6%. Gold also taking a big hit today, although it's down to a previous breakout point. Right, this yellow box here in the middle, that was a breakout point. I could probably get rid of it, but you notice it's revisiting and kind of bounced off that one right now. The only real part that would be of interest to me would be if it got back down into this zone here, which is roughly 1850 to 1875 as a buy point, but pretty aggressive selling going on in gold right now. We're up over pretty much at 2080. Now we're sitting at 1920, so a pretty sharp slide there of $160 per ounce for gold in just the last 6 days. Moving up to the Russell, 1.23% gain, still hugging the bottom there, right? It's still just bouncing right along that bottom, still looks weak. I know it was a big update today. Everyone keeps telling me, yes, I know, I'm still short S&P and Russell. 1.23% gain. It's again, this yellow box is just bouncing right along the bottom there. I'm waiting for a close outside the lower range of that box. So a close on the Russell below 1928, and I'll be singing some praises and doing cartwheels down the street. But we're going to have to wait because it could have another bounce. For me, it's important that it doesn't bounce back up and break this 2044 mark that it achieved this week. Or actually last week. That's the big position I see myself in here with the Russell, is it still looks good from a short perspective. We're just sitting right near that demand zone at the bottom and bouncing off it. On the Dow, though, a little bit of a different picture. You had a pretty nice rally today that erased pretty much 3 days worth of losses. Big up move of 1.71% on the Dow, but still technically looking fairly weak since that since the beginning of the year. Now, Bitcoin, hey, we got some move up, but so what? Who cares? It's right there. It's just in the middle of the range. I mean, this almost looks like the Russell right now. It's just sitting there, and this is for most cryptos looking pretty ugly right now. S&P 500, oh, nice bounce as well. Now, I don't have a real demand zone mapped out here. I probably would want to draw something. Let me just put a horizontal line on this bad boy. I've been really wanting to see this thing stay below 4,200, but it hasn't. Right? So from there, we're looking at it close below 4,150 would be the next big piece to keep it in that downtrend, but doesn't really look like it's helping me now. Will your avatar be giving the presentation to the metaverse? I wish, Bo. That would be fun. No, gotta just go do that one in person. Gotta make old people understand what it's all about. Merlin, you religiously build everything around the OTA core values, or do you modify it a bit? You talking about the way I do my trade setups, Doug? Like my supply and demand zones? Is that what you're asking me? I'm not quite sure, because my core values are to educate and make sure everybody gets what they want out of the markets. That's, I guess I would align myself with core values, is to be the premier educator and educate the best way I can. This is what Les was talking about, and yeah, I mean, I mentioned it yesterday. I said, if you want to buy that demand zone, it's a good time to be buying the NASDAQ. You just got to make sure that you have a stop loss in place if it gets down below 12,900. And it did not get below 12,900 today. It was pretty much right on it. The low of the day was 12,942. So, accolades or testament to buying at demand. Even though this wasn't the strongest demand zone, it's still worth taking a shot. And today we're starting to see that nice bounce up here for the NQ. Now, the only one I'm a little frustrated with is silver. I want to see this at 23.49 on Friday. When we close on Friday, I want to see 23.49 print on silver so I can keep my silver, and then I'm going to sell the Monday morning. I will probably sell the 23.50s again and collect a whole bunch of premium yet again. Jay Powell will fix the Russell for you tomorrow. We shall see. Who knows, man? Again, here, let me just show you real quick. It has to do with rates, and it's interesting to see what's going on here. I have it saved over here. So yesterday, if we look at the change in the Fed funds futures, yesterday there was a 0 to 25% chance, and that was like, you can see it right here. Yesterday, there was a 5.1% chance that we're going to keep rates the same, meaning not raising at all. I mean, you can see that down at the bottom here. Today, there's no chance of them keeping rates the same. Yesterday, there was a 94.9% chance of raising rates 25 basis points. Today, 97%. So it's pretty much a foregone conclusion. But you notice what the change here is, there now is a 1.7% chance that we're going to see a 50 basis point increase. So we saw a little bit of a switch there in just the last 24 hours where we've removed the no raise at all, and now actually a potential for a two increment raise or 50 basis point raise. So that's where we're at for tomorrow. Who knows what's going on? Let's see if the December ones have changed at all. Remember, it was a 34% chance. Yeah, it's still 34.6 that we're going to see 7 rate increases this year. That is a pretty crazy number for December, but we will have to wait and see. PPI at double digits year over year. J-Powell can't hide from that. That's true, but if you look at the numbers that came out on that one, let's bring this up here, and here is your PPI numbers. Yeah, it's still high, but it's less than expectations. So kind of interesting to see that producer price index didn't rise as much. Of course, when you strip out food and energy, prices didn't rise much. Well, who's living without food and energy? I gotta ask, who on earth is living without food or energy? It's crazy. That's right, John. So you're saying there's a chance. Yes, there's always a chance. You never rule it out. But when I look at these those Fed funds futures, you got to understand those are people with a hell of a lot more money than you and me. All right, that's usually big institutions hedging themselves and with big money. So what else do I have for you guys? Let's do a little bit of what's happening tomorrow, and then I got to get ready and go down to an office. Here is your economic calendar for tomorrow. For the 16th, I do have a guest on the show tomorrow. That's going to be an interesting one. I think we're having Larry Jacobson on the show tomorrow. That's right. We're talking options with Larry. So I know you have a bunch of options questions. If you do have some, feel free to send those on in. Put them underneath the YouTube video if you wouldn't mind, and then I can answer those on tomorrow's show. But here's your economic announcements. For the Canadian markets, you've got a lot of stuff with regards to inflation as well. CPI numbers coming out, as well as wholesale sales. And then the U.S. really has a deluge of events. You've got retail sales, import prices, business inventories, housing price market index, crude oil inventories, and then, of course, the big one, which is happening at 11 a.m. Pacific time, is the FOMC rate statement. Now, again, you're not supposed to be giving financial advice at all. My advice would be just go flat and stay away from that announcement because it's going to whipsaw. Normally, it rips one direction, and all of a sudden, let's say it starts to shoot up right as that announcement comes out. Regardless of what the announcement is, let's say it spikes up right at the announcement, and you're like, oh, crap. And you decide you just jump on a whole bunch long. You're hitting that buy button on 1,000 shares at a time. You're just loading up on Apple and Microsoft and Cisco and whatever company it is. And about 30 seconds later, after you bought all those shares because you thought it was ripping because you saw the spike, it comes screaming back down. And it rips down so quick, you're like, oh my God, I have to get out. This is horrible. And you're going, sell, 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 sell. You're selling everything. And as soon as you get filled on your last sell order and take a colossal loss, the market rips back up. And then you're like, oh crap, now it's going to go up. And you do it all over again. And next thing you know, you're in a neck brace because the whiplash has destroyed you. Stay out. Give it 15 minutes to settle. It's exciting. It's fun to watch. But it's just way too risky because you have no control over what's going to happen on that announcement and how wild it's going to be. I used to play them a lot, very actively, and it's just stress. It's a ton of stress, so stay away from that one. Okay, I think that's going to do it for me for today as I need to run and get ready for, I got to throw on some nice clothes and look all professional here as I talk about the metaverse and why it's so interesting for everybody. Larry Jacobson's our guest tomorrow. We're talking options. Again, if you want to get more information, you can send those questions down below YouTube. Just put them down below the video. It helps me with, I guess, search engine optimization. Say, hey, I'd like to cover this, whatever you want, Larry. Bring it up. Larry and I will talk options tomorrow. And I think it's funny. He wants to call the long, not the short of it, which is interesting because, selling is one of the more popular ways to generate income streams. But he's saying, let's talk about directional. So I think tomorrow we're going to talk about directional options with Larry Jacobson. You can put him underneath the YouTube video or email me at TraderMerlin@gmail.com. And of course, go visit Dan Roberts and his team over at Decrypt. They are at decrypt.co. They've got a great team over there with a lot of great, not just crypto, but digital asset information. Subscribe to the newsletter and maybe check out their podcast as well. Thank you guys so much. I will see everybody with Larry Jacobson on tomorrow's show. Take care.